In the fog of war, there are clear winners. While cities burn and futures are shattered on the front lines, balance sheets are catching fire in boardrooms thousands of miles away. The Ukraine war is a human catastrophe of historic proportions. It is also the greatest wealth transfer event of the 21st century. For a specific, powerful set of global players, this is not a tragedy. It is a trillion-dollar opportunity. The question is no longer just who is winning on the battlefield, but who is making the billions. The answer reveals a war economy operating on a parallel track, where profit is divorced from outcome, and the dividends of destruction are paid in cold. Hard cash, the real story of this war, is being written on stock tickers and in corporate earnings reports. If you want to follow the money, you're in the right place. Right now, tell me where you're watching from and what time it is, to see the invisible engine driving this conflict. Hit like, share this investigation, and subscribe to map this flow of capital. We must look beyond the headlines to three concentric circles of profit. At the explosive core, you have the armorers, the weapons makers experiencing a financial renaissance. In the middle ring, you have the commodity kings, the traders and producers of the energy, food, and weapons-grade metals that have become geopolitical weapons. And in the vast outer ring, you have the financial architects, the banks, fund managers, and private equity firms, turning volatility and reconstruction into a speculative art form. This is the war's shadow economy. Let's start at the core, the armorer's renaissance. For decades, major Western defense contractors faced a paradox. Their stock prices were stagnant in a world without a major peer enemy. The war on terror was profitable, but niche, focused on counterinsurgency. The invasion of Ukraine changed everything overnight. It resurrected the specter of large-scale industrial warfare between nations. The demand shifted instantly from drones and Humvees to artillery shells, missile defense systems, tanks, and advanced fighter jets. The companies that make these systems saw their fortunes transform. Look at the stock charts. From February 2022 to late 2023, shares in Lockheed Martin, maker of HIMARS and Javelins and Raytheon Patriot missiles, surged. European giants like Rheinmetall of Germany, which makes the shells and the tanks, saw its share price quadruple. BAE Systems in the UK hit record valuations. This isn't just speculation. It's contracted reality. Governments are emptying their stockpiles to send to Ukraine and immediately signing multi-billion-dollar contracts to refill them. A single new order for 100,000 artillery shells can be worth $500 million. The war has provided these corporations with something priceless, a permanent demand thesis. NATO countries have pledged to raise defense spending to 2%, then 3%, even 4% of GDP for decades to come. For the armorers, the war in Ukraine is not a conflict. It is a generational business plan, but weapons need raw material. This brings us to the second, less visible but equally ruthless circle. The commodity kings. War creates artificial, violent scarcity, and in that scarcity, traders and producers thrive. Three markets have been REVOLUTION. ICD, first, natural gas, while Europe struggled to heat its homes. The great reshuffle of global LNG liquefied natural gas flows created a bonanza. American LNG exporters like Shinnery Energy became the new energy kings of the Atlantic. They bought cheap U.S. gas and sold it at a massive premium to desperate European buyers, reaping record profits. Qatar Energy leveraged its massive reserves into long-term power politics and profit. Second, grain and fertilizer. The blockade of Black Sea ports didn't just raise prices. It rerouted the world's food supply through longer, more expensive routes. Global agribusiness giants Cargill, Archer Daniels Midland, a DM, massively profitable in calm times, became indispensable arbiters of survival. They navigated sanctions, secured shipping, and managed the global food panic, extracting margins from sheer chaos. Russian fertilizer producers, like Uralchem, while sanctioned, found eager buyers in Asia and Africa, often at inflated prices, proving that even a pariah state's commodities find a market in a hungry world. Third, the metals of war. This conflict runs on more than oil and wheat. It runs on nickel, titanium, palladium, and neon gas critical for missiles, jet engines, and microchips. Russia is a titan in these markets. Sanctions created chaos and price spikes, but also gave a massive advantage to alternative suppliers and traders willing to navigate the gray zones. Companies in China, South Africa, and Kazakhstan saw demand and prices for their competing metals soar. Beyond the immediate trade in shells and gas lies the most complex and potentially lucrative. Circle, the financial architects. This is where modern war is monetized at its highest level. It includes the bond traders and currency speculators. They profit from the wild volatility in the euro, the Russian ruble, which famously became the world's best performing currency in 2022 due to capital controls and energy exports, and Eastern European debt. The defense and aerospace ETFs, financial instruments that bundle arms. Stocks became must-have war portfolio items for retail and institutional investors alike, channeling billions of public pension money directly into the arms industry's surge. The vulture capitalists and future rebuilders, private equity is already circling, buying up distressed assets in Ukraine and planning for the eventual trillion-dollar reconstruction effort that will be the largest public works project of the 21st century, funded by Western taxpayers but contracted to multinational construction and engineering conglomerates. This is the ecosystem. But to see its true, morally bankrupt pinnacle, one must look at a specific, shadowy case study. The story of the merchants of chaos who profit from both sides of the equation, turning sanctions into a game of lucrative whack-a-mole. This is where the war's profit machine reveals its most cynical face. There is a hidden tier above the armorers and the traders, operating in the gray space where geopolitics and greed merge. These are the sanctioneers and the sanction busters, a symbiotic pair feeding off the very restrictions designed to end the war. On one side, Western governments impose painful economic penalties. On the other, a global network of financiers, shipping magnates, and black market wholesalers devise ingenious billion-dollar schemes to circumvent them. In this shadow war, the objective isn't territorial gain. It's arbitrage. The weapon isn't a missile, but a shell company. And the profits are untraceable, unstoppable, and utterly amoral. The primary game is the energy laundry. Despite embargoes, Russian oil never stopped flowing. It simply changed its name, its flag, and its price. A shadow fleet of aging tankers, owned by opaque shell companies from Dubai to Hong Kong, formed a ghost armada. They load Russian crude at Baltic ports, conduct risky ship-to-ship transfers in international waters, blend it with other oils, and re-emerge with new paperwork pointing to Malaysia or Ghana. This laundered oil then flows freely into global markets, often ending up in India or China, and from there, refined products can even slip back into Europe. Who profits? The shipping magnates who bought old tankers cheaply and now charge exorbitant freight rates for these high-risk, high-reward dark voyages. The traders in Geneva, Zug, and Singapore who master the paperwork, buying Russian Urals crude at a massive $30 to $40 per barrel discount and selling it at near-market prices. Firms like Litasco, the trading arm of Russia's Lukoil, and a web of newly sprung commodity houses have turned sanctions busting into a precision science, pocketing billions in the spread. Beyond oil lies the dual-use bazaar. Modern Western weapons destroying Russian tanks are built with microchips, ball bearings, and precision tools. A vast clandestine network works to keep these critical components flowing to Russian defense factories. Smugglers use hubs in Armenia, Kazakhstan, Turkey, and the UAE to buy sensitive Western technology, relabel it, and funnel it through labyrinthine routes into Russia. A $10,000 lathe from Taiwan becomes a $100,000 critical component for a Russian artillery plant. The operatives are often not spies, but freelance businessmen exploiting regulatory gaps. They create layers of intermediary companies, falsify end-user certificates, and exploit the sheer volume of global trade to hide their tracks. For them, the WA is a bull market in deception. But perhaps the most grotesque profit center is the reconstruction futures market. Even as the fighting rages, the financial world is placing bets on the aftermath. The World Bank estimates Ukraine's reconstruction will cost over $486 billion and rising. This figure is a magnet for speculative capital. Private equity firms and global infrastructure funds are already acquiring options on Ukrainian farmland, port concessions, and mineral rights at fire sale prices. They are positioning themselves to be the prime contractors for rebuilding cities, roads, and energy grids projects that will be funded by Western aid and frozen Russian assets. This is disaster capitalism on a historic scale, leveraging utter devastation for future monopoly returns. The war for these architects is a necessary demolition phase before a lucrative, taxpayer-funded rebuild. This vast engine of profit, however, creates a devastating irony for the very nations funding Ukraine's defense. The self-imposed toll. The West is caught in a financial feedback loop of its own making. The inflation subsidy. Billions sent to Ukraine help drive up demand for weapons, straining global production capacity and raising prices. The Pentagon now pays more for the same weapons to refill its own stockpiles, effectively paying a war premium to its own contractors. The deindustrialization shock, soaring energy prices. A direct result of the war and the sanctions regime. Forced European heavy industry chemicals, fertilizer, glass to curtail production or shut down permanently, shifting industrial capacity and jobs to the United States and Asia. The sovereign say trap. Funding the war effort has required massive additional borrowing by Western governments, adding to already crippling debt loads and forcing brutal domestic spending cuts. The citizen is taxed twice, once for the aid, and once through the inflation and austerity that follows. So we arrive at the brutal final ledger, who is making the billions. The shareholder in Pennsylvania owning Raytheon stock, the trader in Geneva brokering Kazakh oil, the ship owner in Piraeus running a shadow tanker fleets, the smuggler in Dubai sourcing Swiss microchips, the banker in New York underwriting a defense bond. The fund manager in London buying Ukrainian debt futures. Who is paying the trillions? The Ukrainian soldier paying with blood, the Ukrainian civilian paying with a home, a life, a future, the European family paying with cold, dark winters and crushing bills, the African villager paying with famine from a diverted grain shipment, the Western taxpayer paying with debt, inflation and plundered public services for generations to come. The war economy is a perfect, self-sustaining parasite. It thrives on the destruction it claims to deter. It profits from the pain it promises to alleviate. It justifies its own exponential growth by pointing to the very chaos it feeds upon. This is the ultimate disconnect. The currencies of the battlefield: blood, rubble, trauma are not convertible on the trading floors where this war's real victories are counted. So the final question is this. In a conflict where making money has become as strategic as taking ground, can peace ever be more profitable than war? Or have we built a system where the incentives for ending the conflict are dwarfed by the fortunes being made in its continuation? The answer will determine not just who wins this war, but what kind of world is left when the guns finally fall silent. Let me know what you think in the comments. If this exposed the engine behind the headlines, hit like, Share this critical breakdown and subscribe.